Hello, in today's video we're going to go over a specific topic, which is utilizing 0 DTE options versus 1 DTE options in day trading SPX index options utilizing the SPX daily key levels indicator. So this is a subject that is asked quite often by traders that utilize this particular indicator, as which is better to use, either 0 DTE or 1 DTE. So there are pros and cons of both, and a lot of it just really depends on what kind of session that we're dealing with. This particular session, Monday, October 27, 2025, is a very good session to go over this topic. So we'll be looking at that today. If you'd like to see the full session video for this particular session, which will go over many other aspects of this indicator, including the trading strategy, there's a link in the description of this video to that particular video. Today's video is simply going to go over the narrow topic of 1 DTE versus 0 DTE and the pros and cons of each. Okay, so this is the Monday, October 27, 2025 trading session. As you can see, we had a significant gap up from the prior day's close on this Monday. So this was the Friday close. We had a significant gap up in the opening candle. We had a bullish entry signal from the bull bear KPL on a close above the bull bear KPL. So in taking a bullish entry trade off of this 9:30 a.m. candle, you would be trading from the bull bear KPL, and thus you would have, in that instance, 3 different options as far as strikes when trading a bullish entry signal from this bull bear KPL level. One of those, as explained in the full session video, is the at the money strike that is going to be, in this case, a call strike closest to the level that we're trading from, in this case the bull bear KPL. And then you have 2 additional strikes that you can consider based on this bullish entry from this level, one being the one closest to this midpoint level above, and the furthest out of the money being the one level above R1 and the closest call strike to that level. So again, we're not going to go into the full strategy. You can simply watch that other video, which the link is in the description. This is just going to be discussing the differences primarily between 0 DTE and 1 DTE, both on the entry prices of the particular options, and then how it can play out in a session of 0 DTE versus 1 DTE, especially in a session such as this particular session, where the real move doesn't happen until very, very late in the session, and what happens to 0 DTE versus 1 DTE, even though we're hitting price targets. Okay, so in this case we have the 3 different strikes. They're all call strikes since this is a bullish entry signal. This is the level that we're trading from, the bullish entry signal. So our 3 strikes, the at the money was the 68.45 based on the closest strike to the entry level of the bull bear KPL, and a 0 DTE option of the 68.45 for October 27th expiration was 14.20. Now, for those that are not familiar with the terminology of 0 DTE and 1 DTE, 0 DTE simply means 0 days to expiration. So this is Monday, October 27, 25 trading session. So 0 DTE means that the particular options that are 0 DTE expire at 4 p.m. on the same day, October 27th, Monday, October 27th. The 1 DTE options would expire the following day, one day, so that's where you get the 1 DTE, so that they would be expiring on Tuesday, October 28th at the close of 4 p.m. on that session. So the main difference is you're going to be paying more for the 1 DTE option on any strike than the 0 DTE, because of the fact that you have one additional day of time value added into, that's factored into the price of the option. Now keep in mind that with this particular indicator is used for day trading only. So what that means is that regardless of what strike you're using, regardless of whether it's a bullish or bearish play, regardless of whether it's a 0 DTE option or a 1 DTE option, you are opening and closing the positions all in the same session, in this case the Monday session. So even if you are using 1 DTE options, you are still day trading them, meaning you're opening and closing them in the same session. You're not holding these options overnight, and you're not holding them day to day. So this particular indicator is not for swing trading, it is for day trading only. So regardless of what expiration you're using, even if you were using 1 week to expiration, which is not recommended because they are day trading options only, regardless of what expiration you're using, you are going to be opening and closing those trades all in the same session. So that's why it doesn't make sense to use anything more than a 1 DTE, because then you're paying more for time value for something that you're not really going to be taking advantage of, because you're not going to be holding any option position over the same day. You will be opening and closing them all in the same session, which in this case would have been the Monday, October 27, 2025 session. However, there are some advantages to using the 1 DTE options over the 0 DTE in case you have a session such as today where the big move does not really happen until near the end of the session, in the last 30 minutes to 1 hour of the session. And the reason for that is because the 0 DTE options are going to rapidly lose value, rapidly lose all their time value once we start getting past lunchtime. Remember that the SPX index, the CBOE index, opens at 9:30 a.m. Eastern New York time and closes at 4 p.m. Eastern New York time. So a 0 DTE option is going to be valid from the 9:30 open, and then it's going to expire at the 4 p.m. close on that same day, versus a 1 DTE option on Monday, October 27th would be the October 28th expiration, and those would be valid from Monday 9:30 a.m. all the way till Tuesday, October 28th, 4 p.m. when those would expire. So you're going to pay more for that time value, and that can come in handy in a session such as today, whereas we're not really in the normal type of session where we get a big move right off the bat in the morning part of the session, and instead we get sideways and very little narrow range action the entire session until the last part of the session. And there are sessions in which you're just going to get narrow range through the entire session, and there is no move at the end of the session, such as we saw today. So also keep that in mind, that a couple of times a month on average you're going to see a very narrow range session in which there's really no breakout in either direction, and there's also not going to be a move at the end of the day, such as we saw in this particular session. You're just going to get very narrow range sideways action, a lot of chop narrow range action the entire session. So those do occur, and those are typically going to be the worst trading sessions really for about almost every type of trading, except if you were selling options and taking advantage of the time expiration and the very little movement. This particular strategy is not selling options for time premium to be credited to your account. This strategy is for buying options and making money on price movements of at least one level away for scalps, or 1.5 levels in your favor or more for what we term as regular trades, as you may already be familiar with the terminology from our other videos that we've made on other different sessions in which we explain the full strategy. Now, there are people that use this particular indicator for selling options as opposed to the strategy that we outlined that is our primary strategy, and that's a completely different situation than the base strategy that we employ with this particular indicator. So people that do that type of option strategy utilize this indicator in a completely different fashion. So what we're discussing today is the difference between the 0 DTE and 1 DTE options for the base strategy that we employ and show in all of our SPX trading videos. And that is buying calls on bullish entry signals regardless of where that bullish entry signal is from any of the main levels, the bull bear KPL, or any of the R1 through S1 through S6 or R1 through R6 main levels, or bearish entry signals on any of those main levels. Then we'd be buying puts. So we're simply buying calls on bullish entry signals and buying puts on bearish entry signals. So in this particular session, we have a bullish entry signal off of the 9:30 a.m. open candle, and that entry signal is coming from the bull bear KPL level 68.45.29. So you have basically three different option strikes. Like I said, we're not going to go into the full strategy of how you consider the strikes and all that. You can go watch the other video of this session and we go into that. So basically you have three option strikes here that you can consider for this particular bullish play off of this level. You have the at the money strike 68.45 call option. You have the out of the money strike, the 68.55 call option, or you have the furthest out of the money that you could consider, the 68.65 call option. So the buy price on the 68.45 0 DTE call option on the close of this candle was $14.20. The same strike on a 1 DTE for expiring the next day on the close of this candle was $21. So as you can see, that's basically about a 50% price increase from $14.20 to $21. So that's how much you're paying for the time value premium to have that extra time value on the 1 DTE that expires the following day at 4 p.m. as opposed to the 0 DTE, which is going to expire at 4 p.m. the same day. Now the 68.55, the 0 DTE call on it was $8.30 on this close versus the 1 DTE 68.55 was $14.42. So as you can see, that's a little bit greater than a 50% difference in the price. And then the big example of a price increase difference as far as a percentage wise would be the furthest out of the money strike, the 68.65, which the 0 DTE call on this close was $4.10, whereas the 1 DTE on the same strike is $10.11. So that's roughly a $6 difference between the 410 and the 1011. So that's almost like 150% difference, being the $6 difference between the 410 0 DTE and the 1011 1 DTE. Now, as you can see here, even though it stayed above the bull bear KPL and the neither one of these stop losses is ever in jeopardy of getting hit throughout the session, we still did not get very good price action as far as any volatility. Here we mainly just had compressed action that was mainly a lot of chop. We had a slow, very slow grind, eventually upwards, as you can see here, where these tops are getting gradually higher. However, and these lows were gradually also increasing as well. So it was a slow grinding trudge upward that was mainly just a sideways move and just burning time off of the clock. So this is your enemy with zero DTE options. So options in general are going to, their time value is going to expire, and the shorter the expiration date of those options, and the closer they get to expiring, the amount that the time value is going to come out of them is going to become greater and greater when there's no real movement. If we were getting wild swings of 50-point swings back and forth the entire day, then the implied volatility of those options would have raised quite a bit, and you would see those options actually, even though the time value would still be decreasing on them somewhat, the implied volatility would make them more expensive just based on wild price swings in both directions because of the uncertainty of where we're actually going. In this case, we're just really going nowhere except sideways for the most part, and we really don't have any volatility to speak of, so you really have everything working against you here when you're on the purchase side of options, because you have time value expiring, and then you're going to, on the zero DTE options, have you're facing that 4 p.m. close, of which, if the options expire right at the strike price that you bought them at, then they're going to be worth zero on the 4 p.m. close. So at least as far as the zero DTE options. So what I mean by that is that if you bought the 68.45 call option on the zero DTE and you did nothing for the entire day and it never hit your target and it never hit your stop loss to stop you out earlier at just a normal type of stop loss, and we just kind of went sideways the entire day, and at the end of the day SPX closes at 68.45, well, then your zero DTE call option is going to be worth zero. So that's something that you have to be cognizant of with zero DTE options, at a certain point in the day you're going to have to make up your mind that if things are not moving, meaning you haven't gotten stopped out, but you're not getting really anywhere close to your target for whatever type of trade you're doing, scalp or a regular trade, you're going to start losing money, and it's that losing money is going to start happening faster after lunchtime. So after 12 noon, after the market's been open for 2.5 hours, if we still continue a sideways, narrow, choppy range move and nothing's really happening in either direction, then that option that you bought earlier in the morning is going to start rapidly losing its time value, of whatever time value it still has built in left, as far as especially zero DTE. So in general, it's better to have at least a plan of action in your mind that after a certain amount of time has passed, if you're trading zero DTE options, that if things are not happening one way or the other, you haven't gotten stopped out, but you're also not really getting near your target either, you're better off just taking the loss, the moderate loss that you would have from the evaporation of the time value that was built into that option, rather than taking the chance of waiting the entire day with a zero DTE option and then perhaps ending up with nothing at the end of the day if it happens to, if SPX happens to close right at whatever your strike price is. So that's something you always have to be cognizant of when using zero DTE versus 1 DTE. You still have the additional day. So even though you're still going to be closing out the option the same day and not holding it overnight, it still is going to have, relative to the 0 DTE option, uh, it's going to have a lot more time value because there's still one full session that it would have to go through, meaning the next day's session, until it closes, till it actually expires. So those are not going to erode as fast. So the point I'm trying to make in all this is that if you want to be in a position where you can let the entire session play out, and you want to be able to have the option of not having to look at the clock so much with the 0 DTE options, especially if you're not getting very much movement and we're going past lunchtime, then you're better off using the 1 DTE options, because even though you're going to close them out, as we'll see here in a second in this particular session, which is a good example of this particular situation, that if you're not getting the move that you want, you're still going to be in a good position to make a decent profit if and when it hits your target during the same session. And you're not going to have with the 1 DTE that if you're even going to wait up till the near the close of the same day session, at least in this case being Monday, October 27th, if you're holding options that expire 1 DTE 10/28/25, and we're getting into 330, 340, 345, 350, 355, they still don't expire, those 1 DTEs, until the following day. So you can still close them out during this session, as we saw here, and still make a very good profit. Versus the 0 DTEs, once you start getting past lunchtime, if we're really going nowhere and you start getting into that last hour of trading and you're holding it all the way from starting at, say, somewhere between 9:30 and 10, that where you began it and you were never stopped out, then those basically have 0 time value left during those final hour to 30 minutes of trading, and so you can get some wild evaporations of value depending on what's happening with price action. Alright, so let's just go through and see. We already went through what the entry prices were. Now we're going to see what happens when we have the sideways action here, and we get finally here at 2:42 p.m. where, remember, the trade was was a bullish trade from this level, and we have our scalp only target of a 1 level move in our favor from the level that we're trading, and that would be the R1 on this bullish trade from this level, being a 1 level move for a scalp. So let's look at the price differences. 68.45 0 DTE call is now $17.89, so that's a $369 profit per option. The 68.45 1 DTE call is $26.10, so that's $510 profit per option. Remember, you paid $21 for the 1 DTE back here, and you paid $14.20 for the 0 DTE. The first out of the money, the 68.55, is only $9 here. So you paid $8.30, so that's only a $70 profit. So as you can see here, even though we got our R1 scalp target, because it's happening so late in the session, we're not really making hardly anything here. Whereas if this occurred in the morning part of the session, then we'd be making a pretty decent profit. But because it's happening so late and this is a 0 DTE option, then we're hardly making anything. However, the 68.55 1 DTE option, the price on the close of this 242 candle is 18.47. you paid $14.42. That's a $405 profit per option. So that's still a decent profit on a scalp from that. Now we have the furthest out of the money, and as you can see here, on the furthest out of the money option, we actually are losing money, even though it hit the R1 scalp level. And that's because if it had hit way back here in the morning part of the session, then you would have a profit. You would have a decent profit on this furthest out of the money. But because it's happening so late in the session, and this is a 0 DTE call, we're actually at a loss. So we paid $410. It's now only $222, even though it's hit the one level scalp minimum required target for the scalp. Because it's happening so late in the day, that's why we have a loss. Now the 1 DTE, on the other hand, you pay $10.11. Here on this close it's $12.40. That's still $229 profit per option. But if you look at the difference between this is actually about a $400 difference. Here you have a $188 loss. Here you have a $229 profit. So that's about a $400 difference. So as you can see here, this is a stark example that if we're in a situation like this where the move really, this is delayed until very close to the end of the session, the 1 DTE is still fine versus a 0 DTE. Here you have a couple of things working against you. One, it's the furthest out of the money. As you remember, the at the money is still making profit here. This one is basically just barely above break even, but this one is actually losing money. That's because it was the furthest out of the money, and it's 0 TTE, and it's almost 3 o'clock. There's only 1 hour and 18 minutes left here in the session before this particular 0 DTE option expires. Okay, so starting here, roughly around 3:30 p.m., there's only 30 minutes to go, and we finally get a decent move. This is about a 15-point move or so from here to here at the end of the session, if you're counting these wicks here, and from down here. So this was at least a decent move, but it waited until the final 30 minutes of the session to actually start doing this. So on the 3:48 p.m. candle here, you can see it finally hits mid R1, R2, and that is a 1.5 level move from this particular where the trade started on the bull bear KPL, and that's the minimum required move for a regular trade. However, normally, if you've seen our other videos, when you have the minimum required target move for a regular trade of a 1.5 level move, you have several options normally at that point to either just close everything out 100% regardless of how many contracts you have, or adjusting your stop loss to break even, or break even plus a 15% or 10 to 15% profit buffer on top of break even, or selling and scaling out of 70 to 90% of your contracts if you have multiple contracts, and then just doing the stop loss move to break even, or break even plus the 10 to 15% profit buffer on the remaining runners if you happen to be trading multiple contracts. However, it is too late in the session to do any adjustments. So if you were still holding on to this trade here, regardless of whether it was 0 DTE or 1 DTE, then you're closing out 100% of your contracts because it is simply too late in the session to do any adjustments. And regardless of whether it is 1 DTE or 0 DTE, you are not holding even the 1 DTE option over into the next session. You're still, as we said, this is day trading. At some point during the same session, you are closing out any trades that you open before the end of the session. So no session or overnight holdovers on 1 DTE, 100% closeout only. too late in the session for any adjustments either for 0 DTE or 1 DTE. So in this case, the 68.45 0 DTE still comes out with a pretty decent profit. There's no time value left, but it made enough of a move where after hitting this level, it's 28.25 on this close. So that's still $1,450, $1,405 profit per option on the 68.45 0 DTE because of the fact that it hit the minimum required level, even though it's that late in the day. The 1 DTE 68.45 had a 34.39 here on this close, so it has $1,339 profit per option. Remember, you paid $21 for that. The 68.55 0 DTE call option also has a pretty decent profit here, mainly because of the difference between the strike price and where this level is. There's no time value left. You still have $1,001 profit per option. The 68.55 same strike, but 1 DTE is 26.40, so that's $1,198 profit per option. The furthest out of the money option still has a pretty decent profit, mainly because it finally made a move off of here and finally went up to do something, and then now it was 1.5 level move from the original level from buying it back here. And you have a $460 profit per option on this after buying it at $410 back here, mainly because of this move here to the minimum required 1.5 level move on a regular trade, whereas here on the scalp you actually lost money, mainly because both of these are happening so late in the session. There's no time value left on these. The 68.65 1 DTE, however, on the candle close is 18.59, so that's $848 profit per option. Okay, so I hope that this video has been helpful. Like I said, if you want to see the full session video on this, the link is in the description. And I hope this has been helpful in helping you to decide which would be better for your particular trading style, either 0 DTE or 1 DTE, and pointing out the pros and cons of each, especially in sessions such as this where we don't get a move for the vast majority of the session. Thank you for watching this video. Please check out our other videos on this channel. Please like this video if you found it to be useful, as it helps us with our YouTube algorithm. And please subscribe to the channel if you would like to be notified of when we come out with new videos. So we wish you much prosperity in all your future trading endeavors, and thank you again for supporting our channel and for watching this video.